Ladies and gentlemen, you will get now a first-hand update by the Managing Director of the European Stability Mechanism, Pierre Gramegna. As you know, he was Luxembourg's finance minister before becoming Managing Director of the ESM and also CEO of the European Financial Stability Facility in December last year. Mr. Gramegna used to serve as Director General of the Luxembourg's Chamber of Commerce, and he also had a very rich diplomatic career with various posts in the US, in Japan, as ambassador of Luxembourg. And very importantly, in his professional career, he's truly committed to sustainable finance. And he will be interviewed by Sarah Carrick, who joined the ESM at the beginning when it was just a small startup in the corner of an office of the EIB. So she really saw the whole evolution from a startup to an established institution well respected in the markets. Ladies and gentlemen, please give a warm welcome to Pierre Gramegna and Sarah Carrick.
Ready, let's go. Good morning, Pierre, and welcome to the 5th Capital Markets Seminar. It's now been 6 months since you started your new role as Managing Director of the ESM. What has been your main focus so far?
Well, first, I must say I was delighted to be selected as Managing Director by consensus from the then 19 member countries of the ESM, now 20 as Croatia joined. And my first comment to it would be that it is a tough job to succeed Klaus Regling, that everyone in the room knows. But the transition was very smooth with him, and he encouraged me a lot. So that made it easier, and then I got a little bit of help from my friends, which is in fact a wonderful team I have inherited and whom you all know, who are also in the room. And last but not least, I'm confident that we will have a lot of help of our friends of the capital markets. So that is the spirit in which I took over, and it's been now 6 months. Now the ESM is not really new to me, as like it is the case for all the other countries. As a finance minister, I was in the board of governors of the ESM, and I had also obviously an insight of what is going on. In fact, my very first ECOFIN back in December 2013 was the one where the banking union was agreed. And I said to myself, it's wonderful, the banking union is being agreed, that's good news. And I thought the next day it will be big titles, headlines saying European countries have agreed on the banking union. But the line was very small, agreement on the banking union, they will never deliver it. So 10 years later, 2023, we have delivered quite a lot of it, not all of it. And I think if I can in this introduction, maybe say a word on communication. And we discussed that yesterday also over the lovely dinner in Burglinster with excellent food. We in Europe are not very good at communicating our successes and our achievements. And we continue to always talk about the missing pieces of the puzzle. And there certainly are missing pieces, but there are missing pieces everywhere in the world. Now look at the crisis in financial crisis that happened in the United States. There were missing pieces there. So it's part of life that there are missing pieces in a puzzle, and then you have to work on it.
Thank you, Pierre. The ESM was created in 2012 during the sovereign debt crisis. We're now in a different world and a different environment. Given the current environment of geopolitical tensions and financial turbulence, how do you see the current role of the ESM?
Yes, the role of the ESM, it's maybe good to go back a little bit and see how it all started in the middle of the financial crisis of 2009, 2010. And as Klaus Knott correctly pointed out, we all realized suddenly that an institution like the ESM was missing. So we first had the EFSF, which was a kind of temporary solution, and then the ESM was set up in 2012. Obviously, also when you look at this historically, when the countries had problems, they would go to the IMF. And then it's balance of payments issues that solve the problem or create the problem and then trigger the help of the IMF. Now, when you have a monetary union, you have the same currency. So this pressure was completely underestimated. And so that's how the ESM was born. So what did we do? The EFSF and ESM helped 5 countries that had problems to refinance their budget, could not have the right access or had lost access to capital markets, and issued bonds for those countries, benefited the ESM of its AAA rating, and passed over these low interest rates loans to the beneficiary countries, and that worked very well. We issued close to 300 billion euro loans that are being refinanced on a constant basis, and that obviously also explains our presence on the capital markets. So we were at that time, and that's, I would say, the classical instrument that the ESM has in its toolkit, is helping countries that have lost access to the capital markets or are about to lose it. Obviously, there is other instruments that we have, like bank recapitalization, which was used in the case of Spain. But there's one part that wasn't used yet and which is in the treaty, in the original treaty, and is being, I would say, enhanced in the new treaty when it will be ratified by all countries, and it is the precautionary instruments. Now, the precautionary instruments, to put it in simple words, are there to help individual countries or a bunch of countries if they are, let's say, in a difficult situation but have not lost access to the capital markets. So I see an avenue there that we need to explore more. And as a matter of fact, and now it brings us closer to what happened in the last 3 years in the COVID crisis, the ESM came about with a proposal to have a pandemic crisis mechanisms or support, allocating and putting aside, if you want, 240 billion euro to help those countries who eventually needed it. Now, as probably most of you in the room know, this instrument was not used, and the quick conclusion that was drawn from that is it was not used, so it was not necessary. I think this is a wrong analysis, which allows me to eventually explain in 2 words what the ESM really is. We have 2 things. The ESM is an insurance and a safety net. Because if you have a fire insurance and your house doesn't burn, does that mean that next year you're not going to take a fire insurance because you say, I don't need it? No, you don't know when the fire will happen. So you will continue to need the insurance. So markets, and in fact, I think financial markets, capital markets, were quite pleased with the fact that the ESM flagged its ability, competence, and willingness to help if necessary. And then the fact that this was not used is not detrimental, so we played our role of insurance. As a matter of fact, if I am very narrow-minded, I'd say it's good the money of the ESM wasn't used, because the money of the others was used. So the safety net was played by other institutions who offered other, and we're going to come back to that, the interplay of all institutions in Europe, which is key. So precautionary instruments, I think, is what we could and should focus on, and that's part of the discussions I have with the 20 member countries that I'm visiting. I've visited now 2/3 of them, and I will finish probably by by July, the visit of all the countries. And I will also visit the institutions. In fact, I'm in constant dialogue with the EU Commission, who is one of the organizers of this event. But I've always said I want also to have very important exchanges of view with the European Investment Bank, our next door neighbor, who is the other organizer with us of this event, and last but not least with the European Central Bank, because as Klaus Knott has rightly pointed out, one of the main goals of the ECB is to have financial stability. So we have the word financial stability in our name. So you say, oh, is there duplication here? No, it's not a question of duplication. It's to better understand how we can achieve the goal of financial stability, which is so complicated at the time of multiple crises as we have them. And in the new treaty, and so I've gone from the beginning, from the past to now, we have an additional role that is that we, as ESM, will be the backstop, the safety net for the Single Resolution Fund, which is nurtured by contributions by banks, and will, by the end of this year, have reached 77 billion euro as Single Resolution Fund, and we will nearly double that amount of money as safety net for banks in case there's problems for banks in the European area. So you see that the role is multiple, and I will continue to make sure that we are used, meaning playing our role either as insurer or as safety net.
Thank you, Pierre. We've seen many times today the expression that Europe has shown incredible resilience over the last couple of years, from the COVID pandemic to the impact of the energy crisis following the war in Ukraine. This resilience stems from support, cooperation, and solidarity in Europe. How do you view this, Pierre, and what else, if anything, is needed to improve further?
Yes, I think we are only as strong as the weakest link in the chain in Europe, as everywhere, number one. Number two, the more we all work together, the better. I'm speaking of the countries themselves, I'm speaking of the EU institutions, not only the three that we see here as organizers, but obviously all the institutions that are there. And you can say, looking back, if I had been told 10 years ago where we stand with the banking union today, I would have said, well done, or even you're a dreamer, but we're there. If you had asked me in the beginning of the COVID crisis, how will Europe respond? And I look back and say, hat off. In the night of the 9th of April 2020, at 4 o'clock in the morning, a package was decided with three measures. So one was the pandemic support crisis instrument that I mentioned of the ESM, 240 billion set aside. The SURE program of the Commission that helped save jobs in Europe with European financing, which had never happened in the past. In fact, the Commission as being lender on the market, if you had asked me 3 years ago that this would happen, I would have said, again, you're a dreamer, and it happened very successfully. And then last but not least, the European Investment Bank, which helped companies with guarantees, and specifically for SMEs. So here you have an interplay of all European institutions, and last but not least, and we've heard Klaus refer to it in detail, all the things the ECB did. Now, what the ECB did was really bold. I would dare say is revolutionary, but obviously that's not a word that is fitting for a central bank. So bold is better than revolutionary, but many of those instruments did not exist. The PEP program, which is still, and we saw that on the charts, in existence, has helped by a lot of assets and stabilized the situation, and other instruments that were used. Now we live in an area of tightening, a very progressive, and I would say step-by-step tightening of asset buying by the European Central Bank. So the accumulation of all these efforts have helped us. And in the situation, geopolitical, complicated is an understatement. Dramatic situation, if not tragic, that we have with the war, unjustified and brutal war of Russia in Ukraine. The European Union has come up with the Repower EU program to decouple us as far as possible from the dependency on Russian oil and energy on one hand, but also boost renewable energy in Europe. So I would say that the interaction of all players in Europe has increased the credibility of Europe quite a lot over the last couple of years. And I think this is the reason why you in the financial markets believe in our economies, in our future growth, in our potential. And this is also the reason why the euro is such a credible currency.
Thank you. I think we could talk for hours, but actually we've only got 5 minutes. So very quickly, the last 2 questions. I know ESG is close to your heart. It's something that you promoted for many years as Finance Minister of Luxembourg. Obviously, over recent years, there's been a huge increase in ESG activity from the European investors and also from the bond issuers here. Do you see this trend continuing over the next decade?
I'm going to use a kind of American way of answering this. We ain't seen nothing yet. Let's look at it. Roughly 3 trillion green or sustainable bonds have been issued up to now. That might sound as a huge number, but it's still peanuts. It's less than 5% of all bonds issued and that are still there on the market. So we're still in the children's shoes, as they say in German, den Kinderschuhen. So the potential is huge. Europe, in that area, is a world leader, as more than 50% of all these green bonds issued are denominated in euros, roughly a quarter in dollars. Does that mean that we will remain in that position? I hope, and there's good chances. Does it mean that this ESG crusade, you could call it, is won? Definitely not. Definitely not won. I see over the Atlantic in the United States diverging trends. One trend is the IRA, Inflation Reduction Act, which we European, in the beginning, the very beginning, were contemplating with a lot of criticism, saying, oh, this is support to American industry, protectionism on the one hand. But we could as well, and we're now saying it more, oh, the United States has woken up to the issues of climate change. Let's salute that. I mean, if we were better in communications, as the Americans are, by the way, we would have first saluted, great, the United States has realized that climate change is an opportunity, and more than an opportunity, that they want to be the best ones in that. We should have said, okay, we're now on the same page. Now, we might have issues about competition laws and you're protecting your market in ways that are not acceptable, and then the Commission negotiates, which is also happening. Fine. But again, the angle. But then again, Kalin was in the United States recently, and he told me there's more than 20 US states that have said that they don't want ESG criteria to be used as a criteria for their financing at state level, because it's counterproductive, because it costs too much. So it's not a one battle, not at all. And it's not a battle for the battle. It's because it's about our planet. That's how passionate I'm about this. We need sustainable growth. And not because that's nicer or cleaner. And not because we want to please the planet. Because we want to save humankind. Because the planet will survive. It's we, the human beings, who are not going to survive. So in a way, it's a no-brainer. But we have to act. And financial actors are key. So as Christian Sewing was rightly saying, we will need 500 billion per year to achieve the goals, to finance it, yes. And the banks and the capital markets in all this is key to get there. But underneath, I think we will need to do much more in how we judge, measure, benchmark investments. And there, again, there's a lot to do. Now, the EU is a leader in this with the toolbox that they have called taxonomy. I admire sometimes the Commission finding words, and this is a Greek one, that nobody knew what it meant. But now taxonomy is like the green regulation that the EU has done. We must avoid greenwashing, we must avoid social stranding, and we must avoid stranding assets. Now, this is a tough triangle, and we can only solve it all together.
I think we've run out of time. So thank you very much, Pierre. It was a pleasure.
Thanks a lot.
Thank you.
Thanks.
Thank you very much, Pierre Gramegna and Sarah Carrick.